So we have a few deals here that we're looking at.
We've blanked out there like the loan number and address.
Yep.
Again, just for privacy concerns, I want to make sure that we're not stepping on any toes anywhere.
Right. So what we want to look at the fact that make sure one thing. Give me 1 second, guys. So Nathan, when you're looking at this stuff too, what is something that stands out to you that you think I got to either like it, not like it, and I really want it? What are some of the things that stand to you and say, whoa, this asset's really good?
Man, oh man, there's all kinds of things. So things like when I'm looking at a tape, I'll look at the interest rate, for example. If it's one that's recently non-performing, and by recent, I mean sometime in the last 12 months. If it's got a higher interest rate, I'm much more interested in that.
Yes.
Because the chances of that person making payments again is much, much higher. So I'm much more interested in that. If it's, let's see, if it's got, if there's a large difference between equity, like if there's a big equity gap, whether positive or negative. So if the UPB is much lower than the value or vice versa, I like those. That I can find a lot of good value in those things where it's a lower UPB and higher value, or vice versa, where it's a high UPB and a lower value. I like that kind of a deal. It gives me more options when I'm working it later.
The interest rate to me is a huge thing, and I apologize for being distracted. I realized we had some borrower numbers in there.
Oh, okay.
I was distracted to black those out so we don't have those in there. So for me, if I'm looking at, and we do this in our mastermind weekly class, we have a way to interest rate. Most people don't look at interest rate for some reason. Understand the fact that if it's a 2% interest rate, your P&I is below. If you're looking to get, say, a 10% yield, you can't really get a 2% to a 10 without a dramatic decline of price. Your bid has to be dramatically lower, because that 2% is really your gross yield, subtracting servicing fees. You're probably 1.5. Now to bid that, you have to bid dramatically lower. Now if it's a 10, it's a lot easier.
So the only time that is not a factor is if it's been non-paying at let's say the last date paid, and the last time that they made a payment, the last payment made is like 2 or 3 years ago. If it's been 2 or 3 years since they've made a payment and their interest rate is at 2.5%, I'll look at that.
Yeah.
Because there's almost no chance that they're going to start making payments again or reinstate that. So that 2.5 becomes less important, not necessarily
because
completely
the reason we care about interest rate is A, for performing loans, and B, loans that could reperform or reinstate.
Right.
Remember the fact that you can't modify a loan if they reinstate.
Right.
If they're 5-6 months behind, they reinstate. There's nothing you can do about that interest rate. Your P&I is going to be what it is. Your monthly payment. So again, feel free to put comments in the chat. I apologize for the crazy Facebook, LinkedIn stuff. So let's dive into some of these numbers here and show you what we're looking at. So there we go. If you can't see some, let me know. If you can't hear anything, turn your speakers on, because I guarantee you that everything's working. So let's rock and roll with this. So we have a few assets in here. The first thing that stands out to me, let's go deal by deal first, right? Here's some numbers here. So we're in Iowa. We're flying over Iowa. Some people look at the stuff and say, I'm going to do a Google Walk, and they Google Walk and stuff like that, right? For me, I punch every one of these assets in my due diligence portal to pull out things such as, I'll scroll over here, bedrooms, bathroom counts. I will get last listed price, last listed date, and things like that. If we can get that information, I will. If I can't, I don't, right? I like to know if it's foreclosure data. I like to know what it is. So
yeah, that's good stuff. So one of the other things I look at, state is one of those things, and then I look at the city. So in this case, we got Fort Dodge, Iowa. I don't know much about Fort Dodge. I've never heard of it. So I'll Google it and see how big is Fort Dodge. And for me, anything with a population under 20,000 people is a no-go. unless it's like a suburb of a big city or something like that, and it's just outside of a big
And
city.
one of the things I'm trying to get in our portal is days of market, right? Because that will
That's a good one.
outdo a low volume of people. So if you only have 20,000 people or 15,000, but days of market's 45 days, it's just going crazy. Something's happening there.
Yeah.
Where if the days of market's 300 days, that tells me something differently, right?
So let me ask you, years ago, I used to spend a lot more time looking at the specific city. So if it was let's say it was 25,000 people, so it's just like kind of barely
Yep.
over my threshold, then I would go in and I'd start looking at the economy in that city, what's the major business, all those kinds of things. I do that every once in a while if it's one that I'm really unsure about. Do you spend any time looking at that kind of thing?
I'm the same way you are. It's a deeper due diligence number,
Yeah.
right? Initially, when I look at tapes, that's not a pillar, because if
Not
the deal
usually.
numbers don't work, who cares?
Right.
Right.
Right. But if it's like just barely over
Yeah,
25, 30,000 people, I'll start looking at that kind of thing. And then
yeah,
one thing I'll look at actually is on the Wikipedia page for that city, it'll give me a lot of the time, it'll give me population by year. And if I see, 50 years ago, it was booming and it's just been slowly dying this whole time, then nope, pass. But if it's the other way around, where it's gone from 5,000 people and then in the last 10 years, all of a sudden it's growing, excellent.
yeah. So with that said, I don't look at population at all in any of my numbers,
Oh, interesting.
right? I look at values, I look at less sold, and I depend on my agents. When I don't run BPOs, but when I run my valuations with reaching out to REO agents, that's when they tell me what's going on.
Hmm.
And I look at stuff, because it's population is like crime. A lot of people look at crime as a number.
Yeah.
I don't care about crime, right?
I don't either.
If it's in a really high crime area, but people are buying houses, do I care about the crime?
Right.
No, right? But I get it. Some people want to have that there. But so in Iowa situation here, we have probably just here, we have a UPB of 112.
Yeah.
Right. We have all these numbers here. Was this the regular mortgage or this?
This one, that the giveaway on this one is P&I 0. This means this one is a reverse mortgage. So the borrowers are deceased and this is a reverse mortgage. So the payment is 0. The only play on this one is foreclosure. Really. I mean, you may be able to squeak out something else, but really you're looking at a foreclosure on this.
Yeah. So the borrowers are gone. We have our heirs, right? We derivative our heirs, just like any foreclosure. But that's where it's at. And it's a reverse mortgage is a little bit different, but it's the same idea. They're actually getting money versus taking money in.
Yeah.
And that UPB grows as the reverse mortgage goes. So they're borrowing on it. Yes, Cindy, there's a lot of low interest notes right now. They're showing for portfolio for the fact that if it's low interest, their gain isn't great unless they bought it for a really good price.
Yeah.
If you take a property back, population is important to look at. Absolutely.
Yeah.
For me, if the population is 15,000, but there's houses bought and sold every day and the days of market, say 30 days, I'm less caring about that population because there's movement, right?
Yeah, that makes sense.
And get a feel for it.
Yeah.
Where you may have a population, a really big population, but no one's doing anything. Do you want to sell in a market that's dead or
Right.
one that's alive? So that's where I get from Nathan on that. Again, different perspectives,
Mhm.
right? We see the fact that it's a pre-judgment idea. We see a next due date. Remember, this is not the last payment received, next due date in the amortization schedule.
Right. And then the fact that it's pre-judgment means that they've started foreclosure already. It hasn't gone very far, but it's something has started. So
Yep.
that's nice. I can just kind of step into wherever the foreclosure left off.
All right. So
Saves
let's
me
look at the
time.
fact that we have a year built. Does a year built bother you at all?
Not generally. Before 1950, I start to think about it. If it's like 1920, kind of, sort of. I don't look at it too closely. Again, same thing. If houses are selling in the neighborhood, I don't care. If it was built in 1910, sure. If everything's selling in the neighborhood. So I don't look too closely at that. How about you?
I care about it when it gets too old. I'm more that, sub 1930s that starts to bother me.
Yeah.
because it becomes a problem. It becomes a problem house unless it's been you renovated or something different. That's when the only time it comes about. That doesn't bother me. So
Okay.